This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, everyone, and welcome back to another episode of DeFi Decoded. My name is Andrew Young, and my co-host Alex, who is usually with me, but is currently fishing for muskie in somewhere up north in Canada. But I'm really excited to have my fellow SX co-founder, Jake Hanna, who will be a special co-host slash guest, I guess. And we're going to talk a lot about sort of the overall macro environment, things happening in the current sort of crypto environment, as well as talk a little bit about SX as well. So with that, happy to have you, Jake, on the podcast, I think for your second time.
Yeah, great. Thanks for having me.
Yeah, I mean, it's not like me and you don't talk for 2 hours a day anyways, but
yeah.
So, I mean, this will just be a pretty casual conversation about sort of what's going on in the crypto environment. I think probably what we should probably start off with is the macro backdrop. So the inflation print was way above expectations last week. What are you seeing with the interest rate announcement next week? I know that we have a market on it on SX, but also just kind of curious to hear your thoughts broadly.
Yeah, so Canada actually raised by a full point, so 100 basis points, which was kind of a surprise at the time. So there is some thought that the states could follow suit. They announced next Wednesday, the 27th of July at 2 p.m. So I think the current odds are about 85%. It's a 75 basis point hike, but that implies there's still a pretty good chance that they could do more. I think it's pretty much off the table that they'll raise below 0.75% though.
What Jake's referencing is we have actually a prediction market on SX on what the Fed will do next Wednesday at 2 p.m. And it's currently minus 600 that it'll be exactly a 75 basis point hike, which translates into about an 86% probability. With the other 14%, essentially that'll be 100 basis points. What's interesting about that is actually when 100 basis points at one point was actually the favorite before, right after the inflation print came out. But then the Fed has definitely talked it down. So now it looks like it's gonna be 75. So I guess like Alex and I talk a lot about how macro has been affecting crypto. What's kind of interesting is that like the macro environment over the last 2 weeks has sort of definitively gone worse. But crypto over the last 4 days has rallied pretty aggressively by about, I was looking at Ethereum's up about 50% in 4 or 5 days from 1,000 to 1,500. Just kind of curious, what do you think is driving that rally?
With ETH in particular, I would say it is the upcoming merge. There's been a ton of hype on the merge date. Ethereum devs actually confirmed or stated September 19th as the date of the merge. There's a bunch of talk out there if that's actually going to happen on that date. But I think that in combo with, potentially the Three Arrows Capital stuff has kind of started to play out. It seems like a ton of information is now public on what's impacted and the amounts. Do you think that's all played out, Andrew, or do you still think there is more stuff to drop?
Yeah, no, I definitely agree. The merge is definitely the most important thing. And what's interesting, not to talk up SX too much, but we actually have a market on when the merge will happen on SX. I'm looking at it right now. It looks like we have a market on whether ETH will merge to POS before September 23rd. And it's actually trading right now at about 61%. So minus 155 for people that think about it in terms of American odds. So right now, the betting market thinks that the merge is actually a relatively I would say, a moderate favorite to happen on September 19th. And I have actually been buying no shares. I don't think, just given the history of the merge, we've had multiple delays. I mean, obviously both test nets merged successfully. But just kind of given historical record and given how big of a change this is, I think 61% seems too high. I would guess it's maybe closer to 50 or maybe even a slight underdog is what it should probably be. So that's kind of my thoughts, just kind of given the recent history. But people do seem very, very confident that's going to happen, given both Ropstein and the Goerli, I don't know how to say it, Goerli testnet both merged successfully. So, I mean,
I would.
I think it will happen in the fall. I think it will happen in the fall no matter what. But I don't know. September 18th seems pretty soon, I guess.
Yeah, I would tend to agree with, just it should probably be pushed back. I think they started to talk about the merge when we first got into the space back in 2017. So it's been delayed countless times for multiple years. But I did see a small piece of alpha that makes me think it is going to happen on time, actually. Vitalik is publishing a book, and it's called Proof of Stake. And that book is coming out on September 13th for sale. So it's on pre-order now. So, maybe some smart advertising by him that he's dropping his book entitled Proof of Stake on the week that it changes over. So that's a small piece of alpha that I think the merge could happen on time.
Yeah, Vitalik's using the merge to shill his new book. Yeah, that'd be interesting. I mean, it does show you that he's obviously quite confident. All the Ethereum core devs are very confident that this is the date, given that it's been delayed a couple times. So I don't really have that much to go on, just saying that it's not going to happen. It's more just going off the historical record, just because obviously the core devs have been wrong a couple times in the past and sort of overly optimistic. But either way, Ethereum's obviously moved pretty aggressively. It's actually been outperforming Bitcoin, which is kind of interesting too, because historically Bitcoin's been sort of the thing to lead us out of these bear markets. Typically what happens is people rotate into Bitcoin, Bitcoin moves, and then eventually some of the gains from Bitcoin are rotated into altcoins and sort of more levered, higher beta cryptos. But it's interesting because maybe Ethereum, I mean, this might also just be sort of specific to Ethereum, just given this news. But it's also just cool because Ethereum now becomes like a yielding asset, which should have about a 6 or so% dividend yield, effectively, or buyback yield, however you want to call it. Mm-hmm. Which I think will get a lot of traditional institutional investors interested because it goes from being a cryptocurrency to kind of like a crypto equity in a way, or crypto asset more. So at least for people that like to sort of invest using DCFs and stuff like that, it's a lot easier to model. But anyway, so shifting from there, you and I have talked a lot about sort of the Three Arrows capital situation. Obviously we've sort of come out of most of it. It seems like, from hearing guys like SBF, and I'm just kind of curious, what do you think of the overall situation with Three Arrows? And do you think we've sort of moved past the contagion phase and now it's more just kind of, we're sort of now in the cleanup phase, I guess. There's not too much more downside from here, just given that particular situation.
It's so hard to say because from everything I've seen, Kyle and Sue are not being cooperative at all. So, I think the main players have come forward who are affected by the contagion, but it's hard to say if there's more people kind of hiding in the shadows. Obviously, it's just a terrible situation overall, terribly managed risk. And it sounds like there's still some stuff that can happen.
Yeah, totally. I mean, one of the things that people have been talking a lot about is the GBTC. So this is like the Bitcoin trust. It's currently trading at a 35% discount to spot Bitcoin price. So if you're someone who's a buy and hold investor, you can actually currently buy Bitcoin for effectively a 35% implied discount to the spot price. But the reason why it's trading at such a big discount is Three Arrows, I believe, was the single largest holder of GBTC and still holds a ton of it on its books. And so the idea is that as Three Arrows gets liquidated, they're going to have to essentially sell down a ton of this, a ton of their GBTC, and push it even further. We may get up to a 50% discount on GBTC from NAV, which is sort of insane because GBTC is actually easier to buy than Bitcoin. You know what I mean? You can buy it in your stock portfolio. You don't have to hold spot crypto. So historically, it's traded at a premium because it sort of provides some benefit there. But now you can actually buy it.
Is it possible, though, to convert GBTC back to BTC?
No. So I'm pretty sure, I mean, I could be wrong. I'm not a GBTC expert. I'm pretty sure it's only one way. So you can only, you can buy Bitcoin and convert it into GBTC, but you can't go it the other way until GBTC becomes an official ETF. And so,
okay.
What's interesting is Grayscale is actually pushing for, so Grayscale is the only one I believe that can sort of go in and out. So the discount's actually great for them. But at the same time, they're getting a lot of pushback from people holding GBTC saying, can you guys please convert this trust into an ETF so that this discount evaporates and therefore the price of GBTC sort of goes back to its fair value. And so they're actually currently suing the SEC because the SEC has rejected their application to become an ETF, I think multiple times now. And so they're actually suing the SEC, interestingly enough, because it actually hurts their business to a certain extent, to close it, to make the Bitcoin Trust into an actual official ETF. But so yeah, I mean, it's like there's a potential. I mean, if you're more of like a TradFi crypto investor, there's probably something there in the GBTC sort of Bitcoin trade, just given that you have this massive force seller that is about to come in and drive this thing way off its like NAV effectively. With that being said, though, you don't want to do this as a trade because if you buy it and like sell the spot to sort of capture the implied discount, the discount might get way wider from this Three Arrow situation. So it's kind of interesting. It's kind of a crazy situation that you can buy Bitcoin for what maybe soon be a 50% discount to its NAV. So one thing that Alex and I have talked a lot about is sort of profitable crypto businesses outperforming in a bear market. So both with higher interest rates, people sort of they value long duration assets less, and they value short duration assets more. So things that actually have profitable business models and things that are more kind of value versus growth. And thinking about that within the crypto sphere, we've sort of had this thesis that projects that are generate real revenue, have a real product, and are relying less on kind of long-term growth expectations and more on their fundamental ability to generate protocol revenue are going to massively outperform over the next 6 to 12 months during this sort of bear market. I'm just kind of curious if that's how you're thinking about it as well, or if there's, I guess, specific areas within the market you're looking at.
For sure, that makes complete sense. I think it's super important to actually have a strong underlying business in place for all of these crypto assets. In particular, trying to find assets that have revenue is super important. Obviously, not to toot our own horns here, but SX has a very strong cash flow from SXBet, the prediction market. And we've also raised recently. So I think those are two key factors that are important when trying to find a crypto asset to put money into, to make sure that they can survive what could potentially be a 2 or 3 year bear market.
Yeah, exactly. I mean, if you look at something like token terminal, it's kind of interesting. So everyone always talks about how like FTX and Binance generate billions of dollars a year in revenue, which is totally true. So most of the centralized crypto space is quite profitable. But what's interesting is within the sort of decentralized space, there is not that much cash flow generation happening. So like with SX, for example, which is, you know what I mean? The community sort of estimates around $6 million a year in revenue, something like that. That would actually put us in the top 10 of blockchain fee revenue in the entire world. And really, if you look at something like Token Terminal, here, I'll just pull it up real quick. Token Terminal is this great site. It tracks protocol revenue for different crypto projects. And what's interesting is if you look at the blockchain category, so these are not dApps or applications, these are actual blockchains. What type of revenue have they generated over the past 180 or 365 days? And Ethereum's done about $8.4 billion in protocol revenue, which is pretty crazy to think about. And then the number two is Avalanche at 130 million, which is just like 1.5% of what Ethereum is doing, which is just crazy. Ethereum is quite literally 50 times ahead of everyone else. And then in third is Filecoin at 100 million, and then that's it. Like everything else is below 50 million. Helium, Solana, stuff like that. Yeah. And like by the time you get to number 7, it's like Phantom, and it's under 10 million, which is just crazy to think about. That one, it just sort of shows you how dominant Ethereum is. It literally generates more revenue than the rest of the space combined times 30. But also kind of shows you like why a lot of people are bullish on these alternative layer ones, because in a way that fee revenue is also obviously extractive from users. It comes from sort of higher transaction fees. And so obviously like that makes alternative low cost blockchains more attractive to use. I think what's the Bezos line? Your margin is my opportunity. So with that being said, I mean, I think both of us are pretty big Ethereum bulls, so I don't really see that going away anytime soon. But it does go to show you that within the blockchain space, pretty much there's only 5 or 6 projects that are actually generating any real revenue.
Yeah, that's a fair point. It's also super important to see how these chains also capture the revenue for token holders in the end via each project's own tokenomics. I know the Ethereum change to POS will be great for that. What are your thoughts on Ethereum's tokenomics and value capture post-merge?
Yeah, so Ethereum post-merge, I think, is like one of the most attractive assets in the world to invest in. Post-merge, it acts more like almost like a crypto. It's not an equity because it's totally different. You have to actually do work to earn the yield. So I wouldn't call it an equity, but I call it crypto equity, crypto asset. It's an incredibly interesting asset to own because it's got massive network effects. So these, like, to me at this point, it's very unlikely that Ethereum is going away. It's very unlikely that competitors will ever really usurp Ethereum at this point. Like maybe they'll take chunks out of the market, but and the overall market's going to grow a lot, obviously. But to me, Ethereum is kind of like Bitcoin in the sense that it's just dominant within its niche. And then at the same time, it's growing like crazy. You know what I mean? Its protocol revenues, I don't have the numbers in front of me, but I have to think it's multiplied multiple times over the last couple of years. It's growing.
Yeah, it's been
easily
staggering.
Yeah, easily three-digit annualized growth rates. And then now you're also getting, as an investor, a sort of 5 to 8% either staking yield plus buyback yield, which is more of a burn in Ethereum's case. They call it a burn, but it's effectively a buyback. So whenever I tell anyone that there's like a stock that has huge network effects, yields 5 to 8% and is growing at a 3-digit pace. Like that doesn't exist. Like that's, you know what I mean? That's, but because it's a cryptocurrency and it's hard to own and all sorts of barriers there. And it's also just really hard to understand. You know what I mean? People are obviously very hesitant to get into the crypto space. So
in terms actually of the staking yield, do you currently stake for ETH?
So we don't stake our ETH, but that's also because we like to have our ETH to use for like for liquidity mining or just like have it just to be liquid. And also because I've historically been somewhat bearish on the merge in terms of like its timelines. And so right now you can stake your ETH to earn, I think it's about a 5% yield. And you can do it through Coinbase, you can do it yourself. But that ETH is totally locked up until the merge happens. And so for someone like me who's been kind of bearish on the timelines of the merge, I don't like the idea of having my ETH locked up for what could be a long time.
So actually on that, which is kind of cool, is the idea of staked ETH or STEETH through Lido. Yeah. So currently, I think they have about 90% of all staked ETH is staked through Lido, which has their own token called LDO, and basically that coin also played a role in the Three Arrows Capital collapse as well. So staked ETH, because it's not as liquid and can't be used in as many things, is kind of the receipt that you get when you stake your Ether through the Lido protocol.
Yeah.
Yeah. No, and basically what happened is that's been trading at a variable discount over the past 3 to 6 months based on people's expectation of the merge, because you can redeem your staked ETH for Ether at the end of when the merge actually happens, which could be in 2 or 3 months, kind of that end of September date that Andrew and I were talking about earlier.
Yeah, and what's go ahead.
No, and just it's about a week ago, it was trading at a 6% discount. And in about the past 5 or 6 days, it's tightened up to about a 2 or 3% to spot ETH.
Yeah, no, I was just about to comment on that as well. I'm looking at the chart. So it's interesting. So historically, it actually traded very near at almost no discount, mainly because I think people were bullish on the merge happening, and also just there wasn't really any forced selling of staked ETH. But one of Three Arrows' biggest positions, like you said, was essentially the staked Ether trade. And so when they sort of collapsed, they drove the discount to 6%. So you could actually buy staked ETH for 0.94 of an ETH. And on top of that, you're also earning the yield. And then, yeah, exactly like you said, it's kind of interesting because you can kind of use the discount rate as an implied probability of the merge happening. So what's interesting is like over the last, like you said, the market's implied probability of the merge happening has definitely gone up quite a bit. And in conjunction with that, the price of Ether has been sort of ripping. And one last thing is I do feel very stupid because Lido was trading at, I think it's low in terms of ETH back in earlier this month. It was trading at its absolute low. Or close. Yeah, it's an absolute low. And I remember thinking, I was like, Lido has $7 billion of TVL locked up in it. And the Lido token itself was trading at kind of like a fraction of that. Like essentially it was trading at $500 million, which is crazy. You never see things trading at 1% of their TVL. And especially something that is a definitive category leader, which Lido is at this point. And I just remember thinking, oh man, I really should buy Lido, but the LDO token, but I just didn't do it because who knows? It's one of those things. A lot of times in crypto, you see things that seem really stupid, but then you almost think like there's a reason for why they're trading that way. You know what I mean?
Yeah.
And so you don't like, oh, there's something wrong with Lido. That's why. And then the market obviously corrects, and you're like, that was incredibly obvious. You know what I mean? Like, I've seen it happen now a couple times. So
yeah, I saw that happen on Polygon for sure. Like early on, when he first moved over to Polygon, a fantastic team, and just saw the adoption that they had very early on, how far ahead they were in terms of layer 2 adoption, and the fact that their coin was just so far down in comparison to Solana, Avalanche, Cardano, all these other supposed two chains that were ETH killers. And, it was at a tenth of all of those. And obviously it did correct and catch up.
Yeah, no, I'm actually happy because Polygon was one of the few times where I remember thinking this is stupid that it's trading at 2 cents, and I actually did buy it. Mainly because we were switching over to it. And so I was kind of figuring, hey, if we're going to switch over, other people will switch over, and therefore it's probably a good buy. And then the only problem is I then sold when it went to 40 cents and then obviously went up to $2.50. So I think right now it's back to about 70 cents though. So it's actually
almost back to a dollar now.
Yeah, I mean, Matic's been kind of ripping over the last week because they announced their zKEVM, which is sort of the first instance of zero knowledge EVM compatible sort of platform for people to launch their applications on. So that's generated a ton of hype. And at the same time, Polygon's BD team is essentially one of the best BD teams in the entire crypto space. They just constantly churn out partnerships and generate value. And so
I was actually going to say that too. I think also during the past week have announced a partnership with Reddit and Disney as well.
Yeah, exactly. Yeah, they're one of their NFTs are integrated into Instagram. They're like, at this point, I mean, I understand like some people are bullish on optimism and these other Starkware and these other layer 2s, but to me, Polygon is just so far ahead in terms of adoption. And what's interesting with them is their approach to winning the Ethereum layer 2 space is they're not really taking a specific route. They're just they just have a portfolio of different approaches. And so they're very diversified and don't have the same sort of technical risk that other projects do. And then at the same time, their sort of Polygon POS chain already has sort of billions of dollars in TVL and I think over 4,000 applications. So yeah, to me, it's kind of a no-brainer. Yeah, it's kind of one of those things whenever the price of Matic goes up, I'm like, that makes sense. Yeah. Well, we've covered a ton of stuff. I don't know. Do you have any, how do you think the crypto market plays out over the next 12 months? What's your best guess? Are we higher, lower, or flat from here? That's my last question.
I think we're going to be flat, but with some things tanking and being wiped out. And then strong performers will continue to rise. There still is a ton of capital on the sidelines right now. Those massive funds that raised $500 million, $2 billion, before everything turned at the start of 2022. That capital is still on the sideline, prepared to deploy into the space. And I just think they're going to be more selective going forward in the projects that they put capital into. So I think strong projects will still get financed and strong projects will continue to grow. But I think that it will be very hard for just, not top teams to raise money and continue to grow. I think the space will become a lot more competitive and selective. Yeah,
totally agree. I mean, Alex and I have been harping on about that nonstop. Projects that are the category leader are going to gain on a relative basis, even if overall on an absolute basis, the market's going down. And things that are kind of like the 10th best of their 10th best whatever like lending platform on Ethereum. Like those probably won't survive, or at least will sort of
like it's very hard to see ETH being down from here in 12 months, especially if the merge happens.
Yeah, no, I agree. I think I mean, I'm obviously incredibly bullish on Ethereum, both short, not even really short term, medium to long term. Yeah, I think it's I don't know, like the macro environment's obviously pretty bad. The CIO or CEO of Pantera just put out a report saying that essentially he thinks interest rates are going up another 300 or 400 basis points from here. That I think will have to drive crypto prices down, just because crypto for the most part is valued on long-term potential. And obviously if interest rates are going up, that crushes long duration assets. But overall, the fundamentals of crypto are likely going to are going to improve an incredible amount as we sort of wash out a lot of the sort of lower quality projects in the space. So.
Okay, actually, one thing to ask you on that, if the space falls overall as rates rise, do you think people will be converting back to cash or to stablecoins and staying kind of in the crypto world?
Yeah, so what's actually interesting, that reminds me, I saw a chart on Twitter and it shows that stablecoin balances have never been higher right now. So for the most part, people were converting their crypto back into stablecoins, not really not exiting back to fiat for the most part. So what's interesting is that's actually kind of one of the things that people are pointing to as being very bullish, is that there's just this massive pile of cash that's currently on the in stablecoins that could be deployed back into the cryptosphere. So I just kind of looking at the history. If we do get a couple more rate rises, which then presumably crushes crypto, I think it'll mostly go back into stablecoins. If you can long a stablecoin, you should. But unfortunately, Circle and none of those things are sort of public yet. But
well, actually, on that, I think Aave has plans to launch their own stablecoin as well.
Yeah, so it's funny. This is actually something I think I told you about 3 or 4 years ago. My prediction was that lending platforms would eventually launch their own stablecoins, because in a way, they're already very similar to what MakerDAO is doing, right? MakerDAO is effectively a lending platform. You essentially mint DAI in return for your Ether collateral, which is very similar to the workflow of borrowing from Compound or Aave. And so the logical conclusion is that Aave and Compound, I think given that they have higher TVLs than MakerDAO, they could launch their own stablecoins and outcompete them, just given how profitable stablecoins historically have been for DAOs, because of there's this repayment, there's all these fees on mint burn. And so this is for over collateralized stablecoins, not under collateralized stablecoins like Terra. It's a whole different matter. Obviously those have blow up risk attached to them. But for over collateralized stablecoins, it's actually a great business model, great business. And already having the lending and borrowing piece built out and having billions of dollars in TVL for both Aave and Compound positions them really well to launch their own sort of decentralized stablecoin. So I'm actually quite bullish on that. I think also Compound will launch their own. And yeah, I think eventually most stablecoins will, or most lending platforms will.
Yeah, I'm on the same page there. I think that Aave stablecoin will be massively successful.
I think you're going to see a lot of convergence in DeFi. So you'll see DEXs launch their own lending platforms launch their own stablecoins, and maybe their own DEXs as well. I think DeFi there's so much potential to cross-sell different products. So it makes sense to actually, and a lot of the technology is open source, right? So it's not too hard to envision a lot of these DeFi platforms becoming kind of like DeFi conglomerates, which will also push out a lot of the smaller players, and we'll see some more aggregation and sort of consolidation within this space. And I think what will happen is there'll be massive. Each chain will have sort of its own DeFi platform that is massive within it, and some really big DeFi platforms that sort of just dominate across multiple chains. Yeah, I guess one last question we could talk about is USDC versus Tether. Have you been sort of following? Every 6 months we get FUD about Tether. So sort of people come out of the woodwork who haven't been in crypto, and they get really, really scared that Tether is going to blow up and it's a huge Ponzi scheme. Just kind of curious what your thoughts are on that before we wrap up.
Yeah, so on that, Tether has kind of always been the dominant stablecoin out there. It was the first one, and it's been, I think, probably number 2 to 4 in terms of biggest coins out there for the past 5 years. And it's currently the 3rd largest coin, but USDC has been rapidly catching it and gaining market share, in particular with just new projects choosing to adopt USDC over Tether. And it seems like within a month or two, USDC is going to surpass Tether as the largest stablecoin, which I think is just a healthy move for the space. They're both backed in the same way. So in theory, they both should be fully backed in a off-chain bank account and redeemable one for one. But USDC has stronger audits and just more transparency into the whole process. So overall, I think it's healthy for the space, and I think the market is voting with its dollars as people are choosing to convert to it rather than Tether.
Yeah, and I think one thing to point out too is within the DeFi sphere, USDC is far more popular than Tether. And so as the DeFi sphere has grown a lot larger, that's also helped grow USDC quite a bit. And I think it's still too early to tell because there's also these decentralized competitors that are sort of springing up, but for the most part, they're not very capital efficient. Going back to that whole having to be over collateralized. So it's not really clear that that they can sort of take down a fiat collateralized stablecoin like USDC or Tether. So, and what's interesting too is DAI, which is like the main decentralized stablecoin, a large percentage of its collateral is actually now USDC. So it's actually, these centralized stablecoins are now also, they kind of grow with the growth of the decentralized stablecoins, which is sort of interesting to see. But okay, well, this has been great. So yeah, I just want to thank you again for coming on DeFi Decoded. We'll have to do this again when hopefully if Alex is fishing again, catching some more muskie.
Yeah, sounds great, Andrew.
Yeah, thanks Jake, and thanks everyone for tuning in for another DeFi Decoded. My name is Andrew Young, and look forward to seeing you again next week. Thanks.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.